Switching to lithium now, guys. Our next presenter is Simon Iacopeta, Chief Financial Officer of Core Lithium. Simon has more than 20 years' experience as a mining and finance exec, working for critical minerals, precious and base metals companies in Australia, North America and Africa, and holding senior management and finance roles. Before joining Core Lithium, he served as Chief Financial Officer at Ramelius Resources and also Terramin Australia. Simon joined Core early in 2019 and has been instrumental in Core's transformation from explorer and developer to Australia's next lithium producer. Core is presenting for the first time at Diggers and Dealers as the company ramps up its Fianc lithium project near Darwin to ship first lithium sales before the end of the calendar year. Over to you, Simon. Thank you.
Yeah, excellent. Thank you. And good afternoon, and thank you for coming to hear about Core Lithium. We are Australia's next lithium miner, and it's a pleasure to be presenting Core to the Diggers and Dealers Mining Forum for the first time. The last 18 months have been transformational for the company. Before this time, Core was an early-stage lithium developer with a $50 million market valuation. Today, we are on the cusp of transitioning from construction to lithium production with quality customers, an experienced management and project owners team, and a market valuation above $2 billion. Core is building the high-grade and high-margin Fianc lithium project near Darwin in the Northern Territory. The project is on target for the export of its first lithium shipment by the end of this calendar year, making it Australia's newest lithium mine and Australia's only lithium mine outside of Western Australia. This presentation does contain forward-looking statements, so please note the disclaimer. In the 5 years since discovering Fianc, Core has effectively and expediently advanced the project from discovery through feasibility, project approvals, financing, and now construction, all achieved during challenging times for the lithium industry and on a shoestring budget. Still, we managed to grow Fianc into a low-cost, high-margin project with a 12-year mine life, and we are targeting first lithium shipment by the end of this year and ramping up production in the first half of next. Production will be coming online during a period of record high lithium prices, driven by a shortage of new lithium supply required to meet the surging demand for lithium globally. And we are excited to see our hard work come to fruition. Our achievements to date are a testament to the hard work of the Core team and the board. The Fianc lithium project is located 25 kilometres in a straight line southwest of the city of Darwin and covers most of the Bino-pegmatite field. There are literally hundreds of pegmatites in the area, many of which have been tested and mined for tin and tantalum for decades, but never systematically explored for lithium until acquired by Core in 2016. Fianc is located 88 kilometres by sealed road to Darwin Port and less than an hour's drive from the suburbs of Darwin, which houses over 80% of the project's workforce. Being so close to a capital city means low capex and competitive opex, and the Fianc project will connect to grid power, benefit from a drive-in, drive-out workforce, avoiding the need for mine camps and airstrips, and is supported by arguably the best logistics chain of any lithium project in Australia. Furthermore, the project's low capex and competitive opex is due to the deposit's simple mineralogy and the ability to produce high-quality lithium concentrate using a 3-stage crushing circuit and followed by a proven and well-established dense media separation process. We will be producing about 160,000 tonne of lithium concentrate per annum and as high as 190,000 tonne per annum over an initial 12-year mine life. The project's cost profile relative to the current market lithium price results in strong margins, and Core has executed binding offtakes with Ganfeng Lithium and Sichuan Yahua and has executed a binding term sheet with Tesla. About 80% of Fianc's offtake is secured for the first 4 years of production, with end users Ganfeng and Yahua being among the largest consumers of lithium globally. Negotiations are underway following execution of a binding term sheet with Tesla, the world's largest EV manufacturer, and demand for our high-quality product remains very strong. Pricing under these offtake arrangements is linked to the published lithium concentrate price, which are currently in excess of $5,000 per tonne, many multiples over the project's cost profile. At a corporate level, Core has a $2 billion market capitalisation and $135 million cash at 30 June. And this is after investing over $60 million in project construction and pre-strip mining activity to date. The Fianc project has been funded via equity, which has resulted in multiple high-quality and supportive Australian, North American and European institutional shareholders, and Core Lithium remains debt-free. Core has an experienced board and executive team with a track record not only in project generation, discovery and development, but also in building, financing and operating mining projects throughout Australia. Further to that, we are very proud to say that Core has been regarded as one of the best performing ASX stocks over the past 12 months. During the last financial year, Core's share price increased 300% as compared to the index of lithium peers, which rose 25% over the same period. This performance is due to the achievement of key milestones, including securing funding for construction, securing offtake with quality partners, and bringing the project online at the right time. Core's performance has been further endorsed with the inclusion into the ASX 200 as of June this year. And only last month, we released a reserve and resource upgrade, increasing mine life by 70% to 12 years. Setting these key milestones and defining strategic priorities has enabled Core to develop simple project strategies centred around two basic objectives. First, deliver the Fianc Lithium project, and secondly, continue to invest in organic growth to generate value through mine life extensions and potentially bringing forward and expanding production. Strategic priority number one is project delivery, which means export of first lithium shipment before the end of this calendar year and achieving commercial production in the first half of next. Project construction commenced soon after the company made a final investment decision last September and included site establishment, mobilisation and site infrastructure activity, in addition to the recruitment of an experienced site management team primarily based in the NT. Construction and mining activities are ramping up and being undertaken by a proven owners team. This owners team includes Lucas open pit mine contractors who have proven lithium mining experience, and pre-strip mining at the Grants open pit is well underway, with mining of first ore on track for September of this year. Core also engaged CSI for crushing and screening. Primary crusher modules are in place, secondary and tertiary crushers are en route, and the ROM pad is currently under construction. CSI have crushed more spodumene than any other contractor globally. And Core has also been working closely with Primero since 2019 and engaged them as EPC contractor to construct and commission the dense media separation plant. Construction is underway with steel and other DMS components arriving on site over the last few months, and Primero has considerable expertise in delivering large-scale construction contracts in the lithium sector. All of this putting us in a really good position to reach first production this year. A little over 2 weeks ago, Core released an ore reserve update for the Fianc project, which supports a 12-year mine plan, producing up to 190,000 tonne of lithium concentrate per year. The Fianc project is coming online at the right time, as current lithium spot pricing is multiples over the life of mine cost profile. Under both spot or forecast price scenarios, operating margins at Fianc should see the company generating hundreds of millions of dollars of free cash flow as Core looks to ramp up production in the first half of next year. And this takes us to strategic priority number 2, which is driving organic growth. Last month, Core announced a 28% increase in mineral resources and 43% increase in ore reserves, resulting in mine life growth. A growing mine life enables the company to consider accelerating the development of other prospects in our mine schedule to take advantage of the current lithium price environment. These upgrades also highlight the prospectivity for lithium in and around the Fianc project area and enables Core to consider opportunities to increase annual production and production expansion. And Core has a track record of organic growth. The chart here shows annual mine life growth in blue relative to exploration spend in green. Since discovering Finis in 2016, Core's investment in exploration and project studies has seen mine life continue to grow on the back of a modest exploration budget. This year, we'll be undertaking over 40,000 metres of exploration drilling and investing $13 million on Finis alone. This is the single largest exploration investment in Core's history. And if passed as prologue, then 1 year of mine life is added for every 1.8 million invested in the ground, and a $13 million investment could deliver a mine life closer to 20 years. This $13 million program has just kicked off and is already delivering stunning results. This morning, Core announced a world-class high-grade lithium intersection of 67 metres, grading 1.8%. This intersection was at BP33, Core's second lithium mine, and was outside the currently defined resource envelope. This result will likely translate directly into additional mine life. Further growth is expected to come from Core's dominant land holding over some of the most prospective ground for lithium in the Northern Territory, shown in orange on the screen. In red is Core's first operation, which is the Grants open pit mine and processing hub, which is currently under construction. Development prospects make up the remaining 12-year mine life. They include BP33, Carlton and Hangong deposits, all within a 5-kilometre radius of the processing plant. They are all open at depth, and management are confident, based on results to date, that mine life will continue to grow. Prospects classified as studies reflect existing resources currently in the hands of our mining engineers, with a view to overlaying mine designs and converting these resources to reserves. And exploration prospects represent greenfield and brownfield lithium drilling targets to be funded out of this year's $13 million exploration program at Finis. So at Core, we truly believe that what Finis has delivered to date is just the beginning. Core has flown under the radar for years and is the only new Australian lithium miner looking to produce lithium this year. Core has shifted gear from feasibility and development to construction, and now has its sights firmly set on first production, at which point it will be joining only a small group of ASX-listed peers who are valued at significant multiples to earnings. And we believe the generation of free cash flow will be a valuation step change for the company. This step change is expected to occur over the next 12 months as Core sets out to deliver on its strategic priorities and key objectives. First and foremost is our operational focus to bring Finis online by the end of this year and transition our owners team from construction to operations. Investment in exploration with a focus on organic growth at Finis is also a key priority, with a view to growing mine life. This includes extensional drilling on existing resources, namely BP33 and Carlton, with a target to increasing mine life closer to 20 years in the next 12 to 18 months. There is also a growing focus on stakeholders as Core becomes Australia's next lithium miner. Strengthening the balance sheet to fund growth initiatives out of cash flow, building on the sustainability work completed to date, and formalising an ESG roadmap sets a clear focus on our people, our communities and environment, our business and our shareholders. And finally, near-term catalysts in the coming month include a final investment decision at BP33, Core's second lithium mine, and advancing feasibility studies associated with moving further downstream in the lithium value chain, which is part of our longer-term business strategy. Thank you.
Thank you, Simon. Any questions from the floor? Just down here, please.
Thanks, Simon. You released a pretty amazing drill result today. What do drill results like this mean for BP33, its mine life and its position in the development schedule?
Yeah, absolutely. Great question, Tim. So BP33 is now becoming Core's largest deposit and one of the most prospective, currently at a depth of 400 metres. The recent drilling results shows that the ore body is widening at depth and grade is improving. And on the back of that, we will look to drill further beneath BP33 to look to further extending the resource and expanding mine life. Our target is, to target the low-hanging fruit, and that's exactly what BP33 presents.
Cheers, thank you. Great results so far.
Thanks, Tim.
Any other questions? Just one from me, Simon. How are you thinking about the balance of that offtake that's available for stage one that you referred to?
Yeah, so 80% of our product is under contract for the first 4 years. We've announced only recently a 12-year mine life, and we believe that mine life will continue to grow. So there is opportunity for further offtake arrangements with the right partners. Yep.
Okay, thanks.
Excellent.
Thanks, Simon.
Thanks, guys.